Jordan, how do you play this? I mean, I get all the politics. Do you just remove it, Jordan, from your thought, or can you actually tactically play this in the market?
It's definitely on the forefront of all of our minds, Tom. It's hard to strip out the politics, especially when trading Italy. In terms of how to play it, you have to balance the credit risk. Will Italy default in the next 3 or 5 years is what we at one stage were looking at back in April of last year when we had that big sell-off. We had a big flattening of the curve, like a credit default risk. I think that's been downplayed now, but in the sort of mid to long end, that's where you can have more fun in terms of putting on those political trades. For me, in FX, it translates very much to Euro-Swiss, so we're seeing a lot of safe haven flow back into Swiss right now. We're still in the range of the last couple of months, but I think this will continue lower, 112, even 110 if things really do heat up in Italy, as possible with Euro-Swiss. In terms of how to play it, we've got to watch how those European elections play out. I think the polls might underestimate the amount of support for Eurosceptics, and that's what could drive us lower in the likes of Euro-Swiss.
Jordan, we don't talk Swiss. We have a whole Swiss block. We built it for Jordan Rochester, and that's coming up in a couple of minutes. So we'll talk a little bit more also about that possible flash crash in Switzerland. Nick, if you look at Italy and France, how bad can it get? So we have this political spat. We saw some of the investments and some of, the tensions actually translate into the economy.
Sure. So, look, I mean, I think there's politics everywhere with Eurozone, unfortunately, given how many countries you've got and how many electoral cycles you've got. I think what we're looking at in particular in Italy is concerns over, obviously, the credit markets and the bond yields, which feed through into the banks. So that's a big sentiment indicator for Europe and for the banks as a whole. When you look at the situation with banks in the Eurozone, then clearly they've correlated very closely with where we are in terms of performance on credit spreads. So if we can see these credit spreads coming in, the bond spreads coming in, the bank should perform okay.
Very good. Nick, I look again at the equity markets here. I'll ask you the same question I asked the foreign exchange guy. I mean, where's the opportunity? I want to know the technical opportunity of all this. Is there an ability to buy the Italian banks?
Well, look, I think there's certainly high risk in banks. I mean, if you look at banks across Europe as a whole, they're trading on multiples they were last at in the global financial crisis. So we've derated to a P multiple relative when we were in the global financial crisis. Now, since then, banks have raised over 600 billion euros of equity. So I would argue they're certainly less risky than they were in 2007, 8 and 9. So from that perspective, I think there is opportunity. But you really need to see confidence that you get a little bit less political noise in Italy, France to a degree, and critically the ECB, right? You have to get a feeling that somewhere over the next 1 to 2 years you can start to see the ECB raising rates, because that is absolutely killing banks' net interest income margins.
I mean, Nick, let me show you this chart. Stephen Morris at the FT writing this up today. The CDS for Unicredit is beneath Deutsche Bank. This is Unicredit here and more fear in Deutsche Bank in white this morning. I mean, this is a remarkable lack of trust in the greater continental financial system, isn't it?
Well, look, I think that the individual banks, of course, people look at individual banks, look at individual capital levels bank by bank. But more broadly, what we've seen is, of course, big underperformance by the broader sector. And that's something that I think, the wider investors are looking at. Remember, it's almost 20% of the index. So we need to start to see the financials doing better to start to see the wider market doing better in Europe as well.